Money day, guys and girls. Hope you lot are blessed. If you're now tuned in, you're locked in with me and you're learning with Vel. Now, I want to wish you guys a very happy new year. 2025, what are you doing different? What is going to be the change, or what is going to be the catalyst that makes your 2025 different to 2024? Well, for starters, this is a Market Mondays episode, and we're going to be providing you with all of the information that you need to better equip yourselves in the trading market for 2025. Now, we have Donald Trump jumping back into the big White House, into the big white chair on the 20th, I believe, of January, which is going to be in 7 days' time. So this is also going to be something important, because for traders that were trading back when Donald Trump was the president before, y'all niggas know that was some juicy, loosey times, you know. That was some really nice times to be alive. Some really, really good opportunities. I remember I'm one of the few traders that I know that I could say was able to trade oil going down to $0 a barrel. Could you imagine? What a time. So yeah, there's going to be a lot of opportunities to come, I could imagine. Of course, there's a lot of genocide taking place across the world, which is nasty, and it's unfortunately leading the world to be driven in a certain direction. But all we can do, if we can't change things, guys, is we can just capitalize off of the changes that are taking place. When we see that there are tariffs being imposed in China or Russia, when we see the currency rate has gone from being stable to zero with the Russian ruble, when we see things like Ukraine with Russia, or we see, you know, any real war taking place that affects a particular asset like oil, for example, these things have a major significant change of direction on the markets. And that's the reason why I want you guys to tune into these Market Monday episodes, to understand that everything that happens in the world has a knock-on effect in the markets. We're not just in the markets like it's a, you know, video game. We're in the markets because we understand that by understanding what's happening in the US economy can dictate the strength or weakness of the stock market. We understand that by understanding the revolution of digital currency, this either improves or it downgrades the price of Bitcoin, the price of cryptos. So there's a lot for us to understand. There's a lot for us to take into consideration. But we're in a time where technology has never been so alive, right? We've got AI. AI is, of course, you know, the next biggest thing. We all have seen iRobot. If you haven't seen iRobot, you definitely should see it to understand that 20 years ago, you know, or 10, 15 years ago when the film came out, people would laugh at a day and age where there was actual robots living on the streets, helping people on a day-to-day basis. Now, of course, that's looking like a reality. Now you've got AI robots made by Tesla, the Tesla bot. So, you know, there's a lot to come for the foreseeable future. But of course, I want to be sure to give you guys as much as I can give you, and leave it in a way that you guys can sit on the information and, of course, interact and join the community. So naturally, if you haven't already, be sure to click the link in the bio below. You guys are going to get access to my free trading community on Discord, where I also perform live stream sessions. I give out live trades. I gave out a trade last week for Bitcoin. It was over 5,000 pips, okay, on a Bitcoin short. So there's a lot of value for you guys to gain from that. So if you haven't already, be sure to like, subscribe. You know the vibes. It's lit side. Let's get into this. Okay, so the first thing we're going to do is look at the economic calendar. That's going to be the most important thing for us to understand what's taking place throughout the week, so that we can prepare ourselves in case there's a increased amount of volume when it comes to the specific pairs that we're trading. So we've got the CPI on Wednesday for the pound as well as for the dollar. That's probably going to be the most exciting day. And also Thursday you've got the GDP for the pound, you've got the CPI for Germany, and then you've got jobless claims for the dollar. Now, the CPI for the Germans, that's going to be really important, because Germany is Europe's largest economy. So if Germany is underperforming or if Germany is accelerating in their growth, this is going to be reflected not only in their results but in the European or in the Eurozone's results as well. So of course, when we see the CPI on Friday for the Euro, if the result is positive for Germany, it's most likely going to be positive for the Euro. Okay, Germany is the largest economy inside of the Eurozone, for those of you who don't know. Okay, CPI. Okay, CPI, this is going to be really important, guys. This is inflation data. Okay, there has been a lot of speculation about interest, about the inflation going down. Okay, now of course, naturally, Donald Trump's about to step into the White House in 7 days time on the 20th of January, but there has been some talks that we will be quite stagnant until September. They believe we won't get a rate hike until September. Now, of course, if this happens, guys, that means we're looking at Q3 before we get any type of change financially regarding the interest rates. Okay, now naturally, I'm looking at the bonds right now just to show you guys so you lot can understand. For all of you who are new to my channel, please understand that I do use the bonds to help me understand the direction of currencies. And in this particular instance, we're going to refer it to the US dollar because I'm looking at the US 10-year bonds. Okay. Now, if bond prices goes up, that means interest rates have gone down. Okay. Now, as it stands at the moment, interest rates have been coming down, which is the reason why, interest rates have been going up, which is the reason why we're seeing this coming down. I nearly tongue-tied myself there, okay? This is the reason why we've seen price coming down. Now, we do also have the bond yields, okay? This is the 10-year, US 10-year bond yields. Now, bond yields are connected to inflation and interest rates. So remember this always, guys. If there is ever anything you can take from my videos, I want you to take from this, that the bond market, the bonds are the Mac Daddy. If you can understand the direction of the bonds, then you're halfway there. You're 80% there. Because what that means is it's going to help you understand the overall picture. A lot of traders get caught up in the now, in the what's happening right now, but they're not really understanding what could happen by the end of next week. If I know by the end of next week the market will be selling, then I'm going to look to put myself in a better position from now. That is the art of swing trading. That's the art of looking at the higher time frames, and it's the art of looking at actual instruments, not indicators, guys. We're not using any indicators. We're using instruments to help us better understand the financial markets. It's as simple as that. Okay, so of course we have been seeing higher prices pushing up with the bond yields. I can probably move this out of the way. If we go on the quarterly chart, because of course we are now in Q1 for 2025. Feels so weird saying 2025, guys, but yeah, we can see we've always been in this range. We've always been in this range here since the early 2000s. Okay, but if we look, oh, that's the wrong way. If we look at this one here, we can see here that we've actually always been declining, and now because we are seeing prices pushing up, we know that we're seeing prices pushing up because we've seen interest rates going up, right? Since 2020 lockdown, once we came out of that, they started pushing interest rates higher and higher and higher. At one point, the inflation was so high, it was a 75-year high, guys. Now, unless you or I are 75 years of age, that means the interest rate was so high that probably you and I, as well as your parents, have never even witnessed. That's how high the inflation was. The cost of living was so high, okay, that probably most people alive today had not witnessed. Okay, so I want to put that into context for you guys to understand that now we are living in a much more technology driven environment. Cryptocurrencies becoming the new thing. Robots, AI, it's all becoming relevant, not irrelevant. It's all becoming relevant. And that's going to come with a taxation, because naturally for us to implement changes into any field, okay, there usually comes a taxation that enables the quote unquote government, okay, the good guys, okay, the people that really care about you. It creates a pay packet for them to say, look, we're going to bring these things into the economy, But to do so, we need you guys to pay us back in return. And how do we do that? Well, we don't come to your front door and say, hey man, hey Cavell, we're going to increase your rent payments tomorrow, or we're going to increase everything around you because we need to make back the money we've put into the economy. No, we're not going to do that. But what we will do is we will increase the business rates, maybe lending rates. We will increase all of these things that you invertedly use. Okay, meaning you invertedly, if you're a business owner, you're gonna have you have a store somewhere. Okay, then that store that you own, or that store that you might be leasing, the rental price, repayments could go up by the landlord, which could be a domino effect for you having to pay more, just like what happened in COVID. Or let's say you've got online business. Okay, let's say you need to have an SSL certificate, you need to use a freelancing website like Wix or GoDaddy or whatever it may be, domains.com, whatever, right? They might have a price they charge you now, but at the end of your term, they might charge you they might increase their prices. Like, everything's going to have a knock-on effect for the goods and services that we use. And that doesn't always mean for us that we can understand from before we even get into that phase that it can be very costly. You might start the start of the year saying, hey, well, that's fine. As long as my bills are the same, or as long as my pay is the same, then I'll be fine. But that is not the case, guys. Okay, we need to have investments that can rise with the rate of inflation. We need to have it. It needs to make sense. Okay, if you don't have assets that can rise with the rate of inflation, then you're always going to be left behind, or you're going to be taking 2 steps forward by tuning into this video, but then 3 steps back because you don't have anything that is fighting inflation. If you don't have access to products or services that can generate you a return whilst you're sleeping, and guys, you're going to come to a day in your life where you're going to feel mentally drained, physically tired, and you're going to retire. But when you retire, just understand, if your pension does not give you 20, 30 years worth of funds, then basically you've worked all your life to not even be able to retire and live your life without having to work. Are we really just working our whole lives so that when we're, drained, tired, older, that we don't have no money to go on holiday, to do the things we want to do, to travel, to do these things? We're all hustling backwards here. If you think working a 9 to 5 makes sense, wait till you get to 65. There's some people right now that are in their 60s who have to still work because things are too expensive. Back in the day, you had an epidemic of crack cocaine. People were selling this like it was nothing, right? In the 80s, in the 70s, whatever. Now the new crack is crypto. The new legitimate crack is crypto. It's meme coins. It's investing into currencies early. It's purchasing stocks. These are things that 10 years ago, 20 years ago was probably frowned upon, but now there's a Forex trader in every direction you go. Every reel you check on Instagram, every YouTube video you come across like this one, there is always someone who's further advocating the use of crypto, just like how they probably was advocating crack. Okay, I'm only 31, so I wasn't alive in the crack epidemic, but I'm sure you can understand where I'm going with this, guys. I've been a Forex trader myself for 7 years. For 7 years, I've seen the revolution change from it being unfavorable to being very popular, to being a hot topic. So, with no further ado, let's get into the charts. Let's have a look a bit further into what I'm going to be looking at. So I'm going to start with the NASDAQ. Okay, now the NASDAQ is really high. Okay, the stock market today had a massive cut. It had a massive decline, and that's because there was that's because there's fading hopes for interest rate cuts ahead of this week's key consumer inflation report. Okay, I'm going to say that again to you guys. Right, the dollar and the bonds, the reason why the bond yields rose, okay, is because there is not really much hope that interest rate cuts are ahead. September is the only time we can probably see interest rates being cut. September, guys, that is Q3. That's Q3. That is Q3. So please understand, we're a long way away from having any cuts, which just means, this is the reason why we also saw a drop. I found an article as well. It spoke about Moderna. Moderna took a 22% drop, okay, which is a huge biotech company, because they cut their sales forecast by $1 billion flipping dollars. $1 billion. How do you cut your sales forecast by 1 billion? That is different type of money, different type of butters, right? So anyway, what am I looking at here for the, what is this again? This is the NASDAQ, okay? Well, on the NASDAQ here, we've got a November low. If I go on the line graph, because that is the best way to have a look at charts, okay, the line graph is showing me that we are bearish. That's the first thing you want to ascertain. What is the structure here? Bullish or bearish? It's bearish. This was a low here. We haven't, of course, come down to this low, but naturally, guys, even if we do keep coming down, okay, I want price to push back up so we can take a short in there. That's what I want. And then we can dive down towards the November low. That is what I want. I want us to come down, pull back up, give us a short entry off of this blue level, and then come down towards the November low. That would be really nice. Donald Trump is going to step into the White House in 7 days' time. When he does that, maybe the stock market pumps. You know, this guy chops and changes his mind like the weather. He chops and changes his tweets like the weather, right? He's come in, of course, and he's had a number of deals that he's wanting to mention. His policies. This guy's chopping and changing policies like bricks and mortar. So who really knows what's going to happen once he steps in and becomes a new world boss? No, the new president of the United States. Okay, again here, if I look at the E-mini chart, okay, so the E-mini here is for the S&P 500, right? We're gonna have a look at this. Let me go on this one here. Okay, we're gonna have a look here, and what we do understand is we have, again, on the candle chart here, we've had a new high, right? Price has come down. It's made a lower high, low, lower high, lower low, lower high, lower low. Are we pushing up now to make a lower high? Because if we are pushing up to make that lower high, you damn straight, boy, I want to be able to send out this short inside of the community. Now, with that being said, right, this is the daily low right here, okay? That's the daily low right here. We have closed already beneath the daily low, okay? Today or yesterday's price action closed beneath the daily low, which is superb. So today, if we do get that pullback and price pushes up, I'm looking for an imbalance fill above so that we can, of course, take a short. I've got a candle here that I'm going to play out of, this institutional candle above, so it's going to be a nice area for us to take a short, but we are going to watch to see what happens with price action. Okay, Tesla dropped around 1% today. Facebook is down, Apple's down, Google's down, Microsoft is down. And these are all down, okay? Nvidia's down 3%, okay? And these are all down after the Biden administration, not even Trump, the Biden motherfuckers. They released an updated export rule aimed at controlling the flow of artificial intelligence to adversaries such as China. So because there is this whole massive, banning TikTok in the US and how much data is China collecting, of course, there are strict rules that, the administration, whether it's the Biden or the Trump administration, are going to impose on a lot of US companies like Nvidia. Nvidia is not a US company, but they're listed on the stock exchange. So, of course, China and the big thing right now, guys, the big thing is not currency. The big currency is not money. The currency is data. That is what it is. They're creating apps like no tomorrow. You've got TikTok, you've got Snapchat, you've got this, you've got that. You've got every app that's just collecting your data, hoarding your data. Think about how much people is on TikTok, scrolling. And then it registers the algorithms by understanding what you like, because you like certain things, you save certain things, and you swipe off certain things, right? So they're just collecting data, and then they sell these data packets to third-party companies that actually end up selling stuff to you. And just recently, Apple was in a lawsuit. Okay, Apple was in a lawsuit because Siri, it's like £1 billion lawsuit because Siri's been listening to us. Siri's been listening to the conversations you have, selling your information to third-party companies. And that's how, when you're talking about a dog and you go on Instagram and you see these companies advertising dogs for sale, it's because of Siri. We always knew that the iPhones are listening to us, but we never knew that Siri was playing a part of this. Now, me personally, I don't have Siri on my phone. Okay, I've never had Siri on my phone. apart from like the iPhone 12 days, because I kind of realized I don't want no one listening to me. Maybe Siri can still work. Hey Siri, hey Siri, hey Siri. Siri don't register on my phone. Maybe they're still listening undercover. Of course, who knows? I'm a law-abiding citizen anyway, so it doesn't really make a difference. But there are things that are put in place that can extract data from us. And this is why it's important for you guys to understand that, hey, we're not saying that we're going to change the way of the world, because we're individual people, right? Even though what Caesar says, apes together strong, right? But aside from that, we just want to capitalize and make some money. That's it. We want to make some moolah, make some dinero, make some money, aka money. That's what we want to make. So because we want to make that, we just want to understand these things. We want to sit back, analyze, read this information, take in this information. That's interesting to know, because at some point there will be a point where we understand, okay, well, based off of this and based off of that, and I heard something else 4 months ago, now I put that all together, I can see why the markets would go down. This is how economists collect their data to come up with an answer. It's as simple as that. You have to read, you have to listen. So yeah, E-mini shut right now. I do believe we can get a pullback higher, and if we get that pullback higher, I will be selling to the lower room. Okay, Bitcoin's been pushing. Now look, I was on a nice short for Bitcoin. Okay, the short gave us over 5,000 pips. This short was juicy, let's say. This one here was real nice and sweet, but the reality is, look, if I go on a daily chart, guys, this daily low has not been taken. The daily low hasn't been taken. So are we in a consolidative range right now? Well, kind of, because from November till now in January, we're still only really going sideways. Okay. Yep. Price has made an all-time high, 106, 108,000 it went to, but we're currently ranging right now. We haven't made a new low and we haven't made a new high. When we got to this low, we pushed back up, and this daily low we still haven't taken out. What's going on there? And this daily low, we still haven't taken this out. So it is a bit of a cat and mouse situation right now with Bitcoin. We maybe have to sit on the sidelines and be patient and wait for price to close beneath the low. Of course, the only disappointing thing about Bitcoin, or not even disappointing, but the only thing about Bitcoin is that if you don't get in early, when you're sometimes waiting for that closure, it's too late. And if you have a look at what happened up here, the way how I took this trade up here, called out this short. I called out this short when price was still going up, you know, and then the following day price came down. If we waited for price to come down and close, then that's over 60% of the move. That's the whole move, you know. So sometimes you do have to have enough confidence to back yourself, to make an informed decision, and go for it. So yeah, as it stands, there's been a really big liquidity grab. Price has come down, grabbed the liquidity. The price action is really dirty though. It's really dirty. I'm not optimistic about price pushing up to make a new high, but hey, when Donald Trump steps into that White House seat, I'm telling you, things are about to get real interesting, okay? When we look at this on the monthly looks like it could push up. When you look at it on the quarterly chart, it looks the same. The monthly looks like it could be bullish, but I also wouldn't be mad, or I also would understand if we could get a pullback, because a pullback that we get lower is going to help us eventually going higher. This price action in here to me looks bearish. It doesn't look bullish, but there's too many wicks to the lower side for you to sit here and say this is definitely coming down. So it means you have to either pay attention on the smaller time frame, or just don't fucking touch it. Just don't fucking touch it. You know, just don't touch it. On the 4-hour time frame, we have of course broken the low, right? That's important to know. The 4-hour time frame, we have broken the structural low. So the question now becomes, this pullback that we're going to see, can we mark out this pullback, please? If we mark out this pullback from here to here, this pullback shows us that we need price to come up into this area. Now, what is quite funny is that this is a huge area of imbalance, ladies and gentlemen. So, you know, if price does come up into this area, then, you know, that's going to be interesting if price does come back up into there, that's for sure. So let's see what happens around this area in where we're sitting at right now. There's also another area in here for educational purposes, guys. Whenever you see a consolidative area, and price is slowing down around there. In consolidative areas, there are candles, there are reasons as to why price consolidated inside of that range, and when price returns to those consolidated ranges, there's usually something significant that's taking place as well. So I'm not just going to look up here straight away to the upside and say, hey, yeah, price has got to come up here. No, I'm going to look at the range and I'm going to say, okay, there's probably an order block inside of this range here which could merit price pushing down from here. But if it doesn't do that, of course, naturally we want to wait for higher prices, because that will be the safest for us to enter the trade. Now, next thing I'm going to show you guys is gold. Okay, and this is a bit of a long one, guys, and the reason why it's a nice long juicy Market Mondays episode is because it's the first of the year, first of the quarter, and there's a lot to go into. So it's important for you guys to understand, even if you're watching this video later, past the time that I've actually if you're watching this video past Monday or past this whole week, right, which is the 13th of January 2025, you're just watching this for educational purposes. You're watching this video to understand what information I'm using outside of the charts that I actually use to merge inside of the charts and give me an understanding on my bias. That's important here. Okay, now here we can see with gold was really nice last year. We had a lot of buys from gold, but currently right now gold is in a moment where it's pulled back. Okay, and it's in a structural area for a high, for a buy. However, if I was to use a Fibonacci to buy right now, I would say that price looks like it needs to come down a bit lower. Just by eye, I'm going to tell you it needs to come down lower. Bada bing, bada boom. Forget about it, Frank. Just forget about it. Forget about it, Frank. Okay, so this candle that I've got here highlighted, this is exactly where I want to be buying from. Exactamente. Okay, this is exactly where I want to be buying from, right in here. So based off of that, price can do whatever it wants to do right now, SA. It can do whatever. It can do whatever, SA. Okay, no pasa nada, SA. Because until price comes lower, that's going to be the only time that I'm interested in understanding the direction of gold. Okay, so I'm going to set an alert down here. Set an alert so it can remind me. But also right now, gold is sitting inside of a session candle, guys. It is sitting inside of a candle where it can merit price to push higher. But I'm not really interested in taking a trade on a Monday. A lot of the time, the moves that you have on Monday are fake. So, you know, we've had a lot of buys. I wouldn't be surprised if we had some liquidity grabs. So I'm sitting patient. We've got inflation data on Wednesday. That, of course, is going to be significant. So lastly, let me go to the DX Dizzle. Okay, now the DXY, I'm going to show you guys this. The DXY is linked to the bonds. Okay, so if the bonds continue to crash down, the DXY is going to follow it. Okay, if the bonds continue to crash down, the DXY is going to follow it. I promise you that. Now we are seeing a huge divergence between the bond market and the dollar. And the reason being is because you have to understand the dollar is undercome so much scrutiny of the currency of the nation going bust, of them needing a bailout, of the inflation needing to change. They've had so much things that's happened that the Federal Reserve has continuously been pumping the dollar. So the dollar is actually a catfish. Okay, the dollar is a catfish. It's lying to you. It's showing you something that is not true. That's just simply put, rather than me beating around the bush. Okay, and the dollar's trying to uphold its strength so that it can be seen as a positive currency to still invest into. Remember, the dollar is going to get abolished at some point, at some time. Hence the reason why the whole financial global infrastructure has been adapting to digital currency. So you'd be naive to sit here on this video and say, hey, I don't personally think that the dollar is gonna tank or the dollar won't survive. What's this guy talking about? The dollar's been around for 60, 80 years. That's true. Okay, and by the way, let me stop this video here. If you're now here at this moment in time, I want you to comment LWV in the comment section, and I'm gonna send you guys a playbook where you guys can learn my LWV strategy for free. Comment LWV in the comment section below so I can give you guys the free game, because I appreciate you guys for sitting here for so long, sitting tight and riding with me. Okay, even if you've got the playbook already, Just comment LWV. Let me know who's still here. Let me see who's really taking in these nuggets. Now back to the dollar, okay? What we need to understand and really appreciate when we think about the US dollar here is it served a purpose for so long that, hypothetically speaking here, when you have something that runs for so long, you start to find loopholes around the quote unquote matrix, okay? For example, the loophole around not paying tax, for example, could be digital currency. The loophole for not paying tax could be cash in hand jobs, right? The financial system has been the same for so long that pretty much 99% of people know how to go around moving money in a way that doesn't enable their banks to finding out. And it could just be as simple as having a cash in hand job. So of course, when the future is becoming more futuristic, it's becoming more scientific, it's becoming more, what's the word I'm looking for? Electronic, more technology driven, they have to adopt a new currency. They have to adopt a currency that enables them to be in control. Because with cash in hand, they're not in control. I could have £1 million cash in my house. As long as I'm allowed to use cash anywhere in the world, that's £1 million they can't tax me on. And all they want to do is suppress us to the point where we're just continuously working. That's what they want. They don't want your frequencies to broaden past you working a 9 to 5. They want you to feel trapped. They want you to feel like it's a Monday to Sunday lifestyle, when it's not. Every day is a new day. Yeah, okay, we've got a calendar year. The calendar year is just to help us. Every single day on this earth that you live is a brand new day. So based off of that, guys, you've really got to go out there and get what you want. So when we think about the adoption of cryptocurrency, you have to understand cryptos are not going to be flying whilst the dollar is still pumping. It doesn't make any sense. There needs to be a global infrastructure change. And for over 80 years, the banking system or the global financial system has run off of legacy equipment, old computers that have the big booty. Remember the old school Apple computers? The big booty, the big back off computers, right? These computers have been running for so long. Of course, now they might have up-to-date flat screen computers, but the technology is called legacy. It's the same old technology. Sending a BACS or a CHAPS transfer, which means you've got to wait 2 to 3 days for your funds by paying a fee. Now they're sending cryptocurrency because they realize it's quicker. So why I'm saying this to you is you have to understand, whatever we're seeing taking place right now with this currency, we are never going back up to 151. We're never going back up to these highs, guys. Never. Look, man, we've spent the past 3 years, because we're in 2025 now, we've spent the past 3 years inside of this range. 3 whole years. And inside of that 3 years, look how far or look how wide cryptocurrency has grown. Look how widely adopted it's grown now. Back in the day, people told you it was a scam, right? Now you're hearing this guy just became a millionaire because he invested into some cryptos. Meanwhile, the dollar hasn't really gone anywhere. So, but the bonds have. The bonds have been making a move. They've been making a stern, steady decline. So look, if the dollar does push up higher, which I do want it to, I'm sitting there acting like, oh, the dollar's gonna die, this, that, and the other. I still want the dollar to push up. I still want to make some money. I still want some manyan. Comment manyan in the section below. M-O-Y-A-N. Manyan. Okay, if you guys are here so far in the video and you didn't comment LWV, comment manyan. That's the word. That's the key word of this session, guys. Because if you're here 30 minutes into the video, it means you're really trying to get to that manyan. So, look, the DXY is pushing up. Okay, the DXY is slowly but surely pushing up, but it's taking the liquidity above in this area. We are waiting for a reaction off of this candle above. This is the next high. I don't know if we push to that high, guys, but when Donald Trump steps into that seat in 7 days, we're gonna know what's up. This time next week, we're gonna be saying it's 42 hours away from Donald Trump going into the White House, and who knows what's gonna happen? Who knows what's going to happen? Hold on. Next week, Monday, is the 20th. What am I talking about? Next week, Monday, let me just double check my maths. 7 days away. Yes. Next week, Monday is the 20th. So the next market Monday, hopefully we've got a lot more to share with you guys in terms of volatility, volume, and of course, updating you guys on news that's taking place. So I wouldn't be surprised if the dollar stalls right now. We do have the inflation reports on Wednesday. So I'm looking to see if we can push higher. Okay. But if we push higher based off of a spike on the news, then that would be really interesting. I think we might come down first to grab some liquidity, but I'm bullish. Okay, I'm bullish with the dollar. I need to see it push higher. Okay, it's been doing nothing for so long. We need to see some type of changes. Euro JPY, this is a mitigation zone I have. If this pushes higher, this is the Japanese yen basket. For those of you who are new to my channel, I'm giving you guys nothing but value. If the Japanese yen basket goes up, that means AUD JPY will come down, Euro JPY will come down, and USD JPY will come down. Okay, this is an easy hack. Again, I told you guys, we're not using indicators, we're using instruments to help us understand how we can better navigate through the financial markets. So I've actually got an area that I'd like to sell from when it comes to the Euro JPY as well as AUD JPY. Okay, this is the daily time frame. We go on a 4-hour time frame. Okay, 4 hours, and we go on the line graph. Let me go on the 8-hour time frame. 8-hour time frame, you can see here that we have just been ranging higher slowly but surely, but this low was taken out. Okay, so we did go bearish from here, and now we need a pullback. Ladies and gentlemen. So the pullback that I'm waiting for, if we can highlight a structural area in here. Okay, and by the way, what makes a market structure level? Well, we need 3 or 4 touches. If we get 3 touches on any individual level, you guys are taught that that's support or resistance. It's just market structure. 1, 2, 3 to the 4, Snoop Doggy Dogg and Warren G at your door. Okay, when you get 3 touches, chances are when you see price close like here, here, and here, these areas are usually wicks. They could also be price coming down, as you can see here, and wick in the area. Look at this one here. It's not a coincidence, guys, that price wicks these areas. It's not a coincidence. It's not. Look at that. Okay. So anyway, moving forward, what are we expecting to see happen in here? Well, I want to see what's going to happen around the 97.700 handle. That's what I want to see. I want to see price push up into this zone and then drop it like it's hot, baby. That's what I want to see. If you guys want to see the same thing, then you have to be inside the Discord. The Discord is where I'm providing you guys with the free trades. It's where I'm providing you guys with the analysis, and it's where I'm giving you guys all of the value. So if you're not inside the Discord already, you have to click on the link below. Go into the WAP, purchase my free trial, or just jump in for free. It's up to you, but you guys can get in if you really want to. Okay. The DXY, we're going to look at the Euro JPY. We're looking at this the exact same way we would look at AUD JPY, which is that we need a pullback. We need prices to push higher. Now we can see here on the daily time frame, we took out this low, which was great. The low has been taken, but hey, now we need a pullback. The pullback probably does need to come up to 62, if not here. Once we get this pullback into these areas, what's going on? Once we get the pullback, then we can think about shorting. But I ain't gonna lie to you guys. This one's looking a bit sticky still. I need that imbalance play. That's what I need. I need a gangster bitch. Okay, if price can come up and fill this imbalance up here, then we can have a look at what price action is doing. If I go on the Fibonacci is going to tell me that I need price to come higher, and I don't want it to go that high. That's the thing. I just don't. Okay, do I want price to come up here? Not really, but that would be the optimal entry, especially with this candle that we have here. That would be a juicy entry right in the hit, right in this little G spot. That'd be amazing if we could get price up there, and then we can hold price down to that level. It's going to be a trade that we will have to be patient for, but hey, it will be worth it. So let's see what happens there. And that's all I'm gonna give you guys for the Market Mondays. So I give you Euro AUD now. I'll send out a live trade on that. What I can do is I can share with you guys the Discord community. I can show you guys on here. Look, I'm giving out trades. Look, man, it's always clapping. Look, it's over 5,000 pips with Bitcoin. Come on, guys. Come on. Look, and we do get trades that hit our stop loss, so I'm not gonna ride past them, but you can see here there's far much more winning trades than there is losing trades. The losing trades are calculated. I lost a trade yesterday again over here. Well, I haven't lost a trade, I just decided to close the trade early. But look, guys, I'm continuously showing you guys, you know, whether it's free charts, whether it's free trades, excuse me, whether it's paid trades, I'm showing you guys the profit. I'm showing you guys exactly how you lot can be getting involved too. Now, I want to be sharing with you guys something that is very, very, very convenient for those of you who believe in the power of AI. Now, I do have a software. I've got a quant that is printing money on a daily basis. Okay, people here are continuously on a daily basis uploading their results, and they're simply saying, hey, look guys, V2 small profits, small account profits. People are making profit on a daily basis, 5% and still printing. V2 is fire. V2 printing for fun here. Okay, people are happy, people are making money on a daily basis. The question really is becoming, why aren't you? Why aren't you? Someone made £1,200 here. That could be your monthly salary. It could be your daily wage. It could be your weekly wage. I don't know. But I'm just trying to show you guys that I've been doing this for so long that it's gone past the point of trying to sell you something. It's really just about helping those who want to help themselves. So if you've come this far to the end of the video, I really appreciate the time you've given me, because this time you've given me is helping you better understand how you can become a better trader. It's all about taking in information. That is the only way that you become better with trading. Do you know how much hours I've sat on the charts listening to people speaking? I've spent over 200 hours easily. I've spent over 200 hours just listening to people, watching videos exactly like what you're watching now. And I needed to do that in order for me to become a better trader. I'm living in Dubai right now, right? I'm learning Arabic. In order for me to learn Arabic faster, it makes more sense for me to communicate and listen to other Arabic speakers. I can't just sit here and just go on an app and just learn Arabic. I can do that, but it's going to take me a lot longer to be successful, because I'm not going to have the accessibility of hearing the terminology, hearing the way people pronounce certain things to help me understand the language better, and most importantly, the dialogue. So again, thank you very much for staying with me, guys. 2025 is going to be our year for greatness, for more information, for more videos, for more everything. I got a bit of an insider. Imagine this, okay? Insider joke. I recorded the video. The video was about half an hour long, right? I've gone to football. I've come back home, ready to upload the video on YouTube, and I look at the video. The screen's not being recorded. It's only showing my face. So that's why on the intro, I'm wearing black and now I'm wearing white, because when I came home from football and I got in the shower and I came out, when I've gone to upload the video, I'm like, oh, you're kidding me, bro. You're kidding me. So I've sat here and I've done the video again, just so I can give you guys exactly what you lot deserve. I haven't cut the video short. I've made it even longer this time, just so that you guys can really appreciate and take in the information, man, so that you can better make decisions for your 2025 Q1. This is what we're doing. We're staying together. We're keeping it compact. We're not rushing into trades. We're understanding the markets from a higher time frame so that we can have more success on the lower time frames. And that is the reason why I say to you guys all the time that every day is money day, because of course, whether you're putting yourself in a position right now or you're lining yourself up to get into a trade further down the line, it's all a part of the process of making money, baby. So yeah, don't forget to like if you like the video, love for the love if you've given it already, and be sure to smash the subscribe button. It helps me help others see the video, and of course, most importantly, man, it's all about trying to give back as much as I can. So again, guys, in the comment section below, be sure to click on the link so I can see you guys inside of the Discord, the community, where of course you guys can openly communicate and I can openly help you in terms of any questions you guys have as well. Thank you for tuning in. I've been your host. You've been here learning with Vel. Always remember, guys, that every day is money day.